Hi there. Africa's growing appetite for the bond market. Bonds have become the means for African nations to diversify their sources of investment, moving away from traditional foreign aid. This is also an opportunity to raise money for domestic use by cash-strapped governments and integrate into the global financial markets. Unlike funds raised from multilateral institutions like the World Bank and the IMF, money from the bonds has fewer restrictions and gives governments more leverage as to how to spend the money. There is also a strong movement backed by the West, which is pushing for markets over aid in Africa. They have suggested that African governments would be more responsible for paying back their debt if they borrowed from the private markets as opposed to government loans or aid. Until certain underlying fundamental structural changes are made to broken economic and political systems, Africa is likely to slide back into unsustainable debt yet again, regardless of the source of the debt or aid. African nations' bond rush prompted the former IMF managing director, Christine Lagarde, to raise concerns of rising indebtedness on the continent. She maintained that some African countries had gone a bit ahead of themselves and exposed themselves to external risks as global interest rates rise, and that potential market volatility could be detrimental to these nations. Africa's future in international markets poses some challenges. Number one, political instability is not a thing of the past in some regions of the continent. Number two, fiscal irresponsibility like overspending and poor debt management. Number three, a lack of reliable and transparent statistics can affect future payments on these bonds. For example, it is difficult to ascertain an accurate debt to GDP ratio. Cote d'Ivoire missed a $29 million interest payment after its 2011 disputed election results, which forced it to default on a bond issued in 2010. Ghana and Gabon struggled amid deep fiscal problems to find money for a $750 million bond and a $1 billion bond respectively on a 10-year Euro bond with a maturity that was due in 2017. The Seychelles, apart from South Africa, was the first to issue bonds in sub-Saharan Africa in 2006. In September 2012, Zambia launched a 10-year bond at $750 million, and the issue was oversubscribed by $11 million, making Zambia a trendsetter for other African nations. In 2014, Zambia issued another $1 billion Eurobond to finance its budget deficit, improve its road and railway network, and increase its electricity generation capabilities. In 2015, Zambia issued yet another 10-year Eurobond of $2 billion to fund a widening budget deficit. Rwanda issued a $400 million Eurobond on an Irish stock exchange in 2013, and Nigeria first entered the bond market in 2011 with a 10-year Eurobond. In 2014, Egypt planned to raise $1 billion by selling a 5-year Eurobond. This was an effort to diversify borrowing and finance a widening budget deficit. Egypt suffered the worst political crisis in 30 years, resulting in a rocky economy as a result of the Arab Spring protests. Thank you.